I think the crypto community is having a reckoning. I think they're realizing there's a difference between crypto and Bitcoin. There's the reason that Bitcoin doesn't need to have an army of lawyers and issue 10,000 pages of disclosures is because I think if you look at the macro climate in the middle of 2020, Jerome Powell said, we're not even thinking about it raising interest rates until the year 2024. So then we had the Fed basically buying $120 billion a month worth of bonds, and interest rates pegged at zero. And then everybody said, well, there's inflation, but the politicians said there's no inflation for a year, even though we had massive hyperinflation in assets for a year. But they denied the inflation. And this is a result of them just tracking the CPI index, right? Because as we talked about before, CPI is one out of many inflation metrics you could measure. So they track the one that is going to have the longest lag. Because if you lock people down for a year and they can't take a cruise and they can't go to a concert and they can't go to a restaurant, then they can't consume. So if you can't consume consumer products, you can't, by definition, you can't have inflation in those products. There's no demand. So the later, there's a lag in some demands, like it takes you 6 months to buy a house. So there's a slight lag in house prices. There's no lag at all in asset prices, like bonds hyperinflated in minutes, equities hyperinflated. I think the politicians, from a monetary point of view, they looked at the wrong indicator and they waited and they waited, and they still only had raised interest rates like 25 basis points as of a couple of days ago, right? And so now we've gone from there is no inflation and we're not even thinking about doing anything to, oh my, there's tons of inflation and we have to go faster. And I think like this morning, these 8.5% inflation number came out and it was higher than people expected. And then the markets think, oh, well, they'll have to even raise interest rates faster. So we went from not even thinking about to constantly, continually thinking about and going faster. And it's like, if you're putting 120 billion in bond purchases in the market every month, that's like kind of, it's pumping heroin or morphine into the patient. So markets are going into withdrawal, right? And one part of the market is the real estate market. And so the way that we help the real estate market is we double the mortgage rates in 12 months. Okay. And that takes the wind out of the real estate market. And then they take the wind out of the equity market. And then after they talk about kicking the equity market, then they kick it and they talk about kicking it again. And then they kick it again. And then they talk about maybe kicking it more. And on top of all that monetary distress, I would say we went from like a massive macroeconomic or a monetary tailwind to a massive monetary headwind or currency headwind. But then you have the Ukraine war. Then you have the Russian sanctions. Then you have the escalation of the Russian sanctions. Then you have the escalation of the Ukraine war, like we want it to last longer. Then you have the potential, we literally have people joking about potential nuclear war. So what's going on right now is dramatic escalation in geopolitical risk and uncertainty, and all the currency winds that were blowing one direction blow the other direction. And on top, and that's just breaking things. I think, Gary Gensler's pointed out, he said that a lot of these tokens are securities. And the thing that makes them a security is a small team of people that have control over the protocol. So if a small team of people can make more, or the small team of people are actually able to move the reserves around, then you've got investors relying on the efforts of others in order to make money. And that's the Howey test. And so when you have investors relying on the efforts of others, to protect their investment of money, then you become a security. And there's nothing inappropriate about being a security as long as you make the fair disclosure. So if you look at MicroStrategy, we have like an army of lawyers and an army of accountants, and we have thousands of pages of SEC filings, and nobody in the crypto world reads them. Like sometimes you tweet in crypto and you think they're not even going to read to the 280th character. And if you put a thread and there's a second part to the tweet, 10% of the people will read the second tweet. I think the crypto community is having a reckoning. I think they're realizing there's a difference between crypto and Bitcoin. There's the reason that Bitcoin doesn't need to have an army of lawyers and issue 10,000 pages of disclosures is because there's no small group of people doing anything that could do anything, right? And on the other hand, the rest of the crypto economy is either producing the stable coins or they're producing other tokens. And we can see that there's now massive uncertainty around all that stuff. And, you know, in a way, this is really an educational event for everybody. I think a lot of people in the crypto community that didn't understand the issue, like what is the risk of getting paid 20% yield or getting paid 8% yield on a token, now they understand. A lot of people, when we said, you know, Bitcoin's property and the others are securities, and they don't understand why, like, they're all just crypto tokens. Now they understand that when 4 people can get together and do something that may work and it may crash the entire thing to zero. I'm not so bothered by the situation we're in right now. I mean, other people have a lot of anxiety, and I suppose I'm empathetic to anybody that does have anxiety. But, you know, what I said this morning on Twitter, I still believe, which is, you know, in the near term, the market price is set by people with large amounts of money, a very short attention span, that don't really understand Bitcoin as well as you do. At some point, people will understand the difference between Bitcoin and another crypto token. They will understand the difference between Bitcoin and gold, or the difference between Bitcoin and property, right? And until they do, there's a market of buyers and sellers. Some people want to go short, some want to go long. They're making a lot of noise. It means the traders are trading. But let's, you know, like minute by minute, hour by hour, day by day, you kind of have to reduce your IQ by 50 points. Like, you can't be too smart, because you have to kind of, you know, dumb yourself down to trade with traders. This is why I don't trade with traders, because the opposite of the rational is the profitable, or you have to do the double opposite of the rational to trade with traders. So I don't think that makes sense. But let's go back to October of 2020. In October of 2020, Bitcoin was like 12,000. NASDAQ was 11. I think Bitcoin is 12,800 or something, or maybe 11,800. And NASDAQ was like 11,000 and change. And gold was higher than it is now. And if you roll the clock forward 24 months, Bitcoin is up by not quite a factor of 3, but a factor of 2.75. Gold is down. NASDAQ is sideways. If you're a trader, you know, you go through this perverse thing of, oh, they're going to raise interest rates 75 basis points or 50 basis points, or they said they wouldn't raise it. When they weren't going to raise interest rates 75 basis points, the market rallies. When inflation is worse than you expected, the market tanks. But if inflation is worse than you expected, you really ought to be buying the inflation hedge, which is Bitcoin. But you're not, and that's because people that don't really understand how Bitcoin works are just trading it based upon a back-tested model. So the back-tested model says it's correlated to risk assets with higher volatility. So therefore, if I think risk is going to trade off, I should trade it. Again, they're traders. The traders are in a tug of war with the technocrats. The technocrats are bearish. They're afraid. The traders are mercenary, right? They'll just make a buck. The maximalists are already all in. We're dollar cost averaging. So we're kind of along for the ride. And the Fed's going to control the mood of the traders and the technocrats in the near term. And the Fed's jerking everybody around. But in time, like if the economy actually truly compresses, that someone will come back and they'll lighten up. Like if you look at the way Bitcoin traded in the 1 hour after the CPI numbers came out this morning.
Yeah.
Inflation's a problem. We sell Bitcoin aggressively. Oops, now we buy Bitcoin aggressively. Oops, now we're not sure what we do. What's NASDAQ doing? I think the currency will continue to expand, right? The supply of currency will continue to expand regardless of the Fed policy. There's no policy to decrease the money supply. It's just a question of at what rate do we grow the money supply. It will keep expanding. And I think that the most critical issue to understand is regardless of what the Fed does, the currency supply in the US will expand. But regardless of what the Fed does, the currency supply in the rest of the world will expand faster, right? The Japanese have a yield curve pegged to 25 basis points, which means they're buying every bond, right, in order to keep the 10-year rate at 25 basis points. And they will pump infinite yen into the system in order to keep their interest rates effectively at zero. Mm-hmm. So that's the third biggest currency in the world, right? So the Chinese are expanding their currency. The Japanese are expanding their currency. The currencies in South America are collapsing. Argentina is staring at a currency crisis, right? So the Argentine currency collapses. What's the solution? Get a $40 billion loan in US dollars. Okay. Where'd that money come from? So I think that the currencies are going to continue to expand. The currencies are going to continue to weaken against the dollar. The dollar is going to continue to weaken against scarce, desirable assets. In the near term, there are going to be lots of gyrations. And the other elephant in the room here, the big point is, and this is something that I think most economists don't understand, even most conventional financial thinkers, even a lot of people in the crypto community don't understand. The inflation is not only a monetary phenomena. The inflation is not being driven only because of currency collapse. Inflation is a policy phenomena. So the Federal Reserve, in addition to not being able to stop the policies of other central banks, they also can't stop the war. They can't stop and what is the war? They can't stop the war in the Ukraine. They can't stop the trade wars. We have trade wars right now. We have massive tariffs. They can't unsnarl the supply chain. They can't stop the war on COVID, and they can't stop the war on carbon. The monetary policy is really one of 10 policies that create inflation, right? All of these other policies, are outside the control of the central bankers. And you've got the policies that are outside the control of the US government, right? The policies of Russia and China are outside of our control. So the Chinese just recently locked down, right? Mm-hmm. Okay, so if the Chinese want to wage war with COVID and they're going to lock down their economy, they're going to cripple their production, and that's inflationary. So pretty much every policy you read about in the paper in the past 24 months is inflationary. What policy is not inflationary? Driving on the right side of the road is a policy which is not inflationary. Like stopping at a red light and going at a green light, right? These are non-inflationary policies. If you jacked the interest rates to 15% tomorrow, you couldn't stop the other inflationary policies. The currency will continue to weaken. And as the currency continues to weaken, the real question is just, what do you want to own? And I think the answer at the end of the day is you want to own things that affluent, intelligent people will want to buy from you in a decade.